Hi everyone, welcome to iExamB. Recently RBI Grade B notification was released and there are some changes in syllabus. You can refer our channel for all the updates in detail. In this video, I'll discuss specifically about one of the recently added topic relating to accounting and financial statement and how we can approach this topic. So let's get the discussion started. As we can see here in the general topics point number 8, few of the concepts are added like basics of accounting and financial statements, balance sheet and profit and loss account, cash flow statement and ratio analysis. The most important part here is the ratio analysis. It has been observed in the past that most of the questions come from this topic. However, to perform ratio analysis, we must first have a sound understanding of accounting terminologies and basics of financial statements. After understanding the basics, we will study the balance sheet, which shows the financial position of the business. After balance sheet, we'll study P&L, which shows the financial performance over a specified period of time, and cash flow statement, which shows the flow of cash across different business activities. After this, we will learn all the ratios used to analyze the financial statements, not just those mentioned in the notification, but all the relevant ratios. And finally, we will understand financial statements of banking companies as they are quite different as compared to the financial statement of a normal company. Because we are studying for RBI, this we must know in addition to the general financial statements. All this will form part of our course. My name is Prateek Taldar. By qualification, I am a chartered accountant. I have joined iExamB as accounts faculty. Previously, I have worked with global organizations like PwC and NatWest. Coming back to our discussion, the interesting part is this topic used to be there in syllabus back in 2016 and 17, and it has been reincorporated for 2023 examination. So this becomes very important. This topic is also essential because in an organization like RBI, which is related to finance, one must know the financial and accounting terms. This will also help in understanding the business model of companies as to how they make money, and for understanding the financial risk associated with companies, like how they are earning, how they spend. Considering the importance of this topic, we never remove this topic from our course as it is a very essential part of finance as a whole. We have all the concepts and numerical covered in the course. Apart from our course, we also did a concept building series, Sabko Padhayenge, Sabko Sikhayenge. In that also concepts related to these topics were covered. Now let's discuss some previous year questions which we have recreated on memory basis. In this question, we are given a balance sheet. We can see different kind of item in the asset side as well as liability side. In the asset side, we have plant and machinery, land, stock debtors. Plant and machinery and land are fixed assets. Stock debtors and cash are short-term assets. In the liability sides, we have both the capitals, equity share capital and preference share capital, general reserve, 15% debenture, which is a long-term liability, creditors and bank OD, which are a short-term liability. We need to calculate the current ratio based on the above information. So the formula to calculate current ratio is current asset divided by current liability. First, we need to calculate the current assets and current liabilities. In the asset side, we can see that three items are current assets, stock debtors and cash, with 41,000, 2,50,000 and 14,000 respectively. So the total comes to around 3,05,000. In the liability side, we can see that we have only two current liabilities, trade creditors and bank overdraft, which is 80,000 and 25,000 respectively. So the total comes to around 1,05,000. Now we can calculate the current ratio by dividing 3,05,000 worth of current assets by 1,05,000 worth of current liabilities. So the current ratio is 2.9. Option A is correct answer. Now we have to calculate the quick ratio. The formula to calculate the quick ratio is quick assets upon current liabilities. So the difference between quick asset and current asset is quick assets are highly liquid as compared to current assets. Quick assets generally excludes stock and prepaid expenses. So we will be considering only debtors and cash which are highly liquid while calculating the quick assets. So the total comes to around 2,64,000 and the current liability will remain the same, that is trade creditor and bank OD, which is 1,05,000. In this scenario, the quick ratio comes to 2.51. So B is the correct choice. Now we will be calculating debt equity ratio from the same information. So the formula to calculate the debt equity ratio is debt divided by shareholders fund. Here debt means long-term debt. We have debentures as the only long-term debt here. In the shareholders fund we have equity share capital, preference share capital and general reserve. But the thing to remember is we do have preliminary expenses also in the asset side. Preliminary expenses are expenses which are incurred prior to incorporation date and are written off over the period of time. We will have to deduct this 15,000 worth rupees preliminary expenditure from our shareholders fund while calculating the debt equity ratio. So the total of shareholder funds comes to around 3,05,000, which is equity, preference, general reserve minus preliminary expenditure. So the debt equity ratio will come to around 1 lakh worth rupees debentures divided by the shareholders fund of 3,05,000 and is approximately 0.33. So the correct answer is B. Some of the other questions asked in examination are as follows. In a question, working capital was given, current ratio and liquidity ratio was also given, and we need to calculate the value of inventories. Another question has some information shared and we need to calculate the capital gearing ratio. Further, there was a question in which various business activities were shared and we need to calculate the cash flow from operating activity out of that. There was also a conceptual question on solvency ratio. Similar questions we have in our chapter test and we will be adding some new type of questions as well. We have started a 50 plus 20-day study plan and our course is available at flat 47% off. So you can join and prepare 50% faster. Thank you so much everyone. See you soon.